right in here. Beautiful breakout, ripping higher. It has been selling off since January, from 5,600 all the way down to 4,000, and it continued to sell off until we once again got that exact same consolidation pattern right here off the lows, where it continues to sell off, and then you start to see some supply being absorbed, and the dips tighten, and it consolidates, it breaks out, and just a quick run of $300 an ounce. So nothing, in my opinion, better for trading these commodities than following these patterns. And you don't need any indicators whatsoever. You don't need any macroeconomic knowledge. All that's going to be priced in anyway, okay? Whether interest rates are going up or going down, whether the U.S. is going to take on more debt, obviously they are, whether some foreign nation's going to default, or the equity markets, whatever it may be, don't worry about all that, okay? Let the pros do all that. And when they do, that's what forms these patterns, is they're buying and selling. They're building positions in these commodities, whether it's central banks buying, whether it's Goldman Sachs and Merrill and Blackstone buying. So really, really clean. I just want to start with that this morning because we have copper running into some new highs, and look at how clean this move is in copper here. So I've been talking about copper for, what's it been? 6 months, 9 months, a year, I guess, talking about why I was so bullish on copper. It has continued to advance higher. It's up 35, 40% since then. And you can get some pretty clean entries here, right? So they're not all going to be exactly perfect. But look, this is the pattern you want to look for, okay? You want to look for a strong move higher. There's your indication that the demand is coming in. You then want to wait until you get this tightening kind of consolidation base here forming against resistance. And then you want to buy as it breaks out to go higher. Now, it's not 100% perfect. This was kind of a weird day. I don't really know what happened there. This got a little shallow, but you can still see some of that consolidation action. And I think we're forming a new one right now. So see how we came up, retested right here to this low, give or take a nickel, comes in, shallows up, tightening. So I think we have a coming immersion breakout in copper, and you can trade this with copper futures. You can trade this with the copper ETF, ticker CPER. You'll notice the chart is almost identical. Or you can get some leverage and buy a copper miner like Freeport-McMoRan. SCX, the largest copper miner in the U.S., it also trades fairly well. But, go back and look at this chart. When did you really want to own FCX? If you could only hold it for a month, what month would you have wanted to hold it? Probably this one, right? Where it soared from 40 to 70. That's where you want to own it. I don't really want to be entering this. I definitely don't want to be in when this is happening. How do I get in for those explosions? Well, that's what this pattern is going to help you do. And this, I'll be honest, this was probably not a very great one here. But you see, then it got really squirrely, but it came back pretty quick. But look what we're forming now. This is one of the cleaner setups I've seen in Freeport. After this big move higher, we are getting these just swoopy consolidation, and hopefully we kind of tighten up like this against the top. When that happens, you'll want to buy FCX on a breakout above $72 a share. Okay? All right, I've been talking at you this morning. Let me talk with you. Good morning. Happy to see you all here. If you're not, for any reason, a Black Ops member, I think most of you are, make sure to go to that link in the description and get signed up. It's $5. That's for the whole year. We're doing these sessions on YouTube now. I'm going to try to keep doing on YouTube, but we may have to go back to Zoom if we get another strike like happened last year. So if that happens, it'll be for members only. There's another Thursday Zoom session with my analyst for only you guys every single week. You'll get access to our industry strength indicator, which helps you keep abreast of which areas are leading the market. And what do you know? Gold miners, mining and metals, right? Starting to see a real trend there. Everything's lining up perfectly. You'll get my weekly newsletter, hit your inbox every Friday evening. You can even call my support staff if you have questions. So tons of stuff. It is literally $5. There are no strings. That's $5 a year. It doesn't renew at $1 billion. I don't think it renews at all. If it does, it's at $5. Okay, no strings. We have more expensive services. We have premium services. We do all the work for you, but this is just $5. So tradewithross.com or just scan the QR code in the corner. Make sure you are signed up for that, okay? So, what's everybody else looking at this morning? And does everyone understand this breakout pattern? Do we understand why this works? I know I beat you guys over the head with this, but man, there is nothing better, absolutely nothing better to identifying when those supply and demand dynamics are in your favor. Because if you go back out here and look at, for example, the big run up in gold, look at how many of these opportunities you had. See how it comes in here in shallows? There's your breakout buy. There's your breakout buy. There's your breakout buy. See how this works? It'll help you get in right here during these explosive periods. One, two, three, four, 5 perfect entries that delivered you 15% gains. 14%. I mean, and this is in gold. This is the miners did even bigger. But that's all the big moves happen right here at these entry points. Until, of course, the party did eventually come to an end and rolled over, but now it's setting up again. I don't know why I got a strike. It's been a while since I did. I was doing a live session just like this one. They wouldn't tell me what it is, so I have no idea. Are you bearish on SpaceX? I am short-term bearish on SpaceX. I'm short 200 shares at 130. I am putting my money where my mouth is. I had an order to sell another 100 at 150, and look at that. The high of this day right here, $149.60. If it had gone 40 cents more, I got 1,000 shares short. I'd only be down a grand right now. But I am, and listen, I think SpaceX is a phenomenal company. I love Elon Musk. I love what they're doing. I think this will one day be a $500 stock. But right now, there's just massive supply coming in. All these unlocks. I'll be honest, I've been wrong on it so far. Well, the last 2 weeks, I've been wrong on it. I thought it would start falling a lot faster. I thought the insiders would immediately cash out as soon as that lockup opened. So far, that has not happened. But it doesn't change the math of the billions and billions of shares that are coming available for them to sell steadily over the next 3 months. And I just cannot fathom a world where there is $1 trillion worth of demand that is going to absorb all this selling of stock, or call it 500 billion or 300, however many sell. So I still think we're going lower. I think this is a dead cat bounce. I think the shorts piled in heavily leading up to the unlock, seeing what I thought was going to happen. And maybe this fell faster than it should in anticipation of that. And maybe the short covering absorbed a lot of that selling as a push back up. But I still think we're going lower. I think we're getting down. I'd love to see 60 a share. I do think that's where we're going. You know, roast me. Listen, I read the comments. I get all the hate in the world. I understand. People are very passionate about this stock. People own their 3 shares and get their panties in a wad. If somebody says it's not going to $1 billion, I understand. All right, but supply and demand is supply and demand. ALOY. Yeah, ripping again. This is a pretty clean play on the magnets and the metal space. The rare earth stuff, Trump said in a recent, where was he? Some training, I forget what it was. He said point blank, you want to get rich? I'll tell you how to get rich. Magnets. I mean, that's what he said. And stocks tend to move on his words. Now, this is an extremely volatile stock. And so you have to understand that when I say, for example, I like something one day, then a month later I don't, I can believe in this company over the long term, but not want to buy when it just went from 10 to 30, okay? And instead want to buy when it's down here, kind of consolidating off the lows, looking for these little moves here. So this is a tricky one to buy or to trade. But yes, I'm obviously still bullish on ALOY. Is Alphabet accumulating in the same manner? Close. It's trying, I think. It's not quite there yet. What you want to see ideally is shallowing. Trying to find a good example here to kind of show you what I'm talking about. So notice how in each of these breakouts over in here, and I know I'm going to stocks that went up really big, but like that's what you're looking for, right? So you want to see what it is they do before they make that big move. And notice how these pullbacks come down to here and then to here. And then see how they kind of shallow? Each drop becomes a little less. That's in a perfect world what we want to see. Let me like zoom in on this one over in here. So see how it came down, 30%, and then, 14%. These are actually about the same. Final two in here, but see how you kind of get that shallowing. Like once it makes this low, the next one should be higher. The next one ideally should be higher, right? That's what you want to see. You want to see the volatility contracting. Just think about it like a coiled spring, okay? As it's getting tighter and tighter and tighter and tighter, it's going to release that energy. If, on the other hand, you have the opposite and the contractions are getting wider, it dipped 10%, then it dipped 20%, then it dipped 30%. Well, that's not a consolidation. That's increase. Now, let's look at one, and you need to see this because this is an anomaly, and then I'll get off this topic. Based on what I just told you, Micron looks broken, right? So it came down here, and then in here, about even. Now, what should it have done? It should have gotten shallower, right? It done something like this. So why did this happen? Who can tell me? Why did this happen in here? It shouldn't have dipped that much if it was really in consolidation. If it was, the shares are getting absorbed. It's the BlackRocks and the Magellans and the Fidelities gobbling up the stock, buying up the shares, building these massive multi-million share positions. That's why the volatility is contracting, because there's fewer and fewer shares to buy, right? The supply is shrinking. Not earnings, Jason, yes. Durella, Jabber, Minkirk, 60, not sure how to say that. Yes, the war, right? The Iran war happened. What else went down in March? Literally everything. We went to war. It was unexpected. The entire market sold off. Look at the NASDAQ. It was trotting along, kind of chopping and tightening up, and then it fell off a cliff. We weren't expecting a war. But look at how quickly it came up. That is your signal. How quickly does it come back? And for a company of this size, how big is Micron? Micron is $1 trillion, okay? For that stock to come back 53% in 15 days, $500 billion of value created in 2 weeks. That is massive, massive buying. The demand here is huge, right? They were gobbling it up at $350 and $450 and shopping. When they got a chance to buy it at $300, they threw everything at it. And then you got that one last little tightening for about 1, 2, 3, 4, 5 days. And then look at the breakout. Right here. Let me close this up. Right there, nice and clean. Not huge volume, but bigger than most of the days here, the final consolidation. Look at these big up days. Would y'all rather see this as candles? Is that easier? Look at these up days in here. Note these purple candles. That stands for the highest up volume day in at least 1 year. That's big buying. And this is a free indicator. If you just, on TradingView, just search Ross Givens volume, it'll pull it up if you want that. But look at the move up. Look at how it's going here. Look at how high the volume is on those days. See this big high buying? That's telling you you're right. So demand is increasing as it runs higher. So the supply, the number of shares available to buy, is over here shrinking and shrinking and shrinking and shrinking. The float is getting smaller. The stock is moving from the weak hands, me and you and me, me at least, who's a total chicken, who uses stop losses, don't want to lose a lot of money, into the strong hands, which are the funds and the hedge funds and the mutual funds and the endowments that are building big positions they want to hold for a year. And that's where you get the powerful move. Okay? And look at how strong that came out of the gate. I mean, just blew out. Right? And this thing went from 470 to 1,090 in 42 days. That is a 131% move in 6 weeks. Enormous move. Superpower. So that's what we're after, right? And for anyone sitting here going, well, yeah, Ross, but then it fell down to 800, you were completely missing the point. You were talking like an investor. If your goal is to own stocks that you can hold for 5 or 10 or whatever years, that's a completely different conversation than what we're having right now. I am, for better or worse, and if you're not this way, I'm probably not going to be a ton of help for you, what they call a swing trader. I'm looking for stocks I can hold for generally 2 to 10 weeks. That's my window. I'm not day trading. I'm not getting in and out 17 times a day. But I'm also not Warren Buffett. I'm not trying to buy American Express in the 70s and live on that success until I'm 90. I'm trying to find stocks that can double in 6 weeks. If you do that a small handful of times throughout the entire year, you're going to have phenomenal results. So, again, this is not for everybody, and that is okay. If your goal is to find stocks trading at 7 times earnings that are going to eventually show their value by the end of the decade, that's fine. There's nothing wrong with that. But it's not what I'm here to show you how to do. I'm not your guy. Okay? This is the move. And listen, I'm not saying you would have known to sell right here on the tippy top. Nobody would. When would you have gotten out of this thing? I don't know. I'd have started trimming when it broke the 20-day moving average, and I've been out of all of it when I got into the 50-day. I probably would have sold some into strength over in here. So, we did sell some into strength over here. So it's a 100% move. You're at 113. The worst spots, you're out at 85%. So your blended returns about 100% in 7-8 weeks, right? So as I'm showing you this stuff, that's what we're trying to do, right? And they're not all going to run 100% in 6 weeks. They only run 20 or 30 or 50, but depending on the stock and how much it typically moves, that'll determine what your probable target is, or possible, I should say. And the best way to calculate this, the best way to kind of get an idea of what it could move, is take the ADR, all right? If you're using TradingView, please put this indicator on your chart. Go to indicators, okay? And what you're going to search is, where is it? Right here. See that? Let me copy and, can I copy and paste this? Whoops. Let me see if I can type it in the chat here. ADR percentage / ATR / LOD dist table. That's the name of the indicator. Did that pop up in the chart? Yeah. Add that to your chart. And the ADR stands for the average daily range. That means this stock, on average, over the last, let's see, mine's set to 20 days. So over the last 20 days, how much does the stock move from high to low on average? Why does that matter? Well, it kind of gives you an idea of what a stock can do. If it's moving 7% per day, then let's say that's 3-4 good days that week, could move 30-35%. Now, if you compare that to Walmart, it moves 2% on average per day. So if Walmart has a phenomenal week, what's it's going up? 7 or 8%. That would mean it's generally less risky. You probably don't have to risk as much money on it, but you want to take that into account. If you buy Walmart, we're not going to see a double in 6 weeks. But it's also unreasonable to try to buy Micron or risk 3%. That's pretty tough. But if we look, I just can't do the candles. If we look at Walmart, I think we're starting to see some consolidation here. And again, the reasons are going to be different, right? Maybe Walmart, they're buying up because it's cheap based on sales multiples or PE or whatever it may be. Maybe they have some new online experience. I don't know what the deal is. I don't really care. But if I bought this, I'd be looking for what? Probably a move up into around here, which is something like, 12%. That's why you're not going to see me trading Walmart. Okay. What is ADR compared to ATR? ADR is the average daily range. ATR is the average true range. The difference is ADR is not going to change based on the time frame of the chart. The ATR is, if you went to a 1 minute chart, you have the average range of a 1 minute bar, right? So let me make sure I'm telling you the truth here. So if we go to a 1 minute, nope, I lied to you. That's a good question. I feel like an idiot now. Difference between ATR and ADR. Let's see if you make them the same number of days. Nope, there's definitely a difference. I don't know. I've always just preferred the ADR. Oh, I'm sorry. ATR, average, that's the number of dollars. It's in points. ADR is percentage. ATR is in dollars per share. Let me see if that's holds up here. If that's the case, the ATR should be like 50. Let's see if that's right. 70. Yeah, close enough. Okay. Make it 20. 25. Yeah, that's right. Okay. Good to know. Sorry about that. I knew there was a reason I use ADR. It's just easier to see the percentage than take the dollars and go, okay, how many is that based on the current price, right? ATR includes gapping too. Okay, good to know. Thank you. See, you guys, I don't know everything. So ADR is saying is that ATR is the total move includes the gap. So it's from the previous day's close to this close. ADR, average daily range, is from open to close. And this is set at percentage. Okay, thank you guys. Learn something every day. If you got into a stock like NESR before earnings at 26, good job, man. Where would you put your stop loss at the low of the breakout? So if I were to, you're saying if I bought it. So this one I would have either, if I were trading, I would have either been buying like here on that breakout. In both cases, my stop loss would have been right here at the last swing low. Okay. Oh, I forgot my new monitor. Yeah, I'll look it up next time. On the other hand, if I was buying over in here, and, you know, that would have been the breakout buy, but let's say you got in early, I would have probably had my stop loss here. So if you bought at 26, I'd have been at 24.40. So I'd have been risking, you know, whatever that is, 6-7%. And if you're not sure where to put your stop loss, just use 1 ADR. That's usually a nice little in-between. It's going to keep your risk from getting too crazy. The smart blank was called to mergin. I don't know what that means. NOW. Yeah, NOW still looks good. I mean, if y'all remember, I did a video on this back when it was like $100 a share. And, you know, this thing went from 100 to 140 in 13 days. So, I sold the bulk of it. My stop was at break even. I got out the rest. I had a nice little, like 20% gain in a couple of days. It still looks great, though. It's a little sloppy, which is understandable. It's a software stock. People, you know, the market thought software was dead. They all came down. Then Jensen Huang is out there saying it's actually going to be $1 trillion company. And, you know, it's a bit volatile still, but we are beginning to see, right, that kind of tightening up. I like this nice, tight little range of the last 5 or 6 days right here on top of this 200-day moving average. So, yeah, I think it looks great. I think you could even buy a little mini breakout here above 130 with a stop at 120. But, yeah, everything looks good. It's doing exactly what I expect to see as a stock consolidates off the low. This I was not expecting, right? I kind of thought we'd see this, which is a clean, orderly consolidation. And I forget what this was. It's probably, that's around the same time I did the video, but I'm not moving the stock. I mean, I have zero influence in the world, and I'm definitely not moving a $120 billion company. So maybe when Jensen was talking about it, I don't know. It got a little wild. I kind of took advantage of that. But yeah, this is textbook stuff. Coming out of consolidation, right? I would be looking for a move up here to about $180 to $200 a share. Right there into that last acceptance area. Okay? Does anybody understand why I'd be targeting that area? Jimmy, thank you. Gap, yep. Using Fidelity. I haven't found ADR in their charts. Yeah, Fidelity is not really known for active charting. Listen, I've tried it all. I have Fidelity accounts. I got Interactive Brokers accounts. I got an account at Moomoo. The bulk of my trading, the charts from TradingView are without a doubt the best out there. Period. Hard stop. No one can argue their charts are better. They just don't exist. Unless you do like maybe a TC 2000, which has scans and stuff in it, but there's a big learning curve there. So with Interactive Brokers, you can, with TradingView, you can actually link a handful of brokers to it. So like I'm logged into Interactive Brokers here on these charts, so I can trade right here off the charts. And you can do that with Interactive Brokers. TradeStation is another one, Moomoo. But yeah, look into TradingView. See if you like it. I mean, you can try the free plan. I think you get one or two indicators. The cheap one's maybe $20 a month or something. It's not a whole lot of money. Bingo. Rocket Boy. Nailed it. Yep. Trap money looking to get their money out. Exactly. And you know what? Jack was a perfect example of this. So let's look at Jack. Now, what's going on with Jack? Well, the company's been getting murdered. Okay? Sales are falling. Profitability's not great. They got lots of debt. It's been massively shorted. But it started to consolidate off the lows. And I want you to see how this played out. I'm going to turn all the moving averages off. Look how clean this was, okay? Now, I did a video on this stock right over here because two things were happening. One, short interest was very, very high, 35, 40% held short, which means you could have a short squeeze coming. It was consolidating off the lows. Look at how clean this pattern was here. See, it's everything we've talked about for the last 30 minutes. Big sell down, and then it consolidates and absorbs and contracts. Little dip, immediately bought up. Look at how tight that is. So we had a breakout coming at 14. It was also getting added, one of the Russell indexes, which means some forced buying coming in. So it's a perfect breakout from 14 to 1780, pulled back, and look where it stopped. If you extend that breakout line, notice how it bounced right here and within, what is that? Maybe 50 cents there. So a perfect little retest, and it bounced. And then we had the earnings report, and what I was saying was, and this just happens with companies that are in the gutter like this, the short interest is really high because everyone's betting against it, right? Sales are falling, profitability is falling. That's why it trades at 0.2 times sales. So when it comes to their earnings, they don't have to blow out expectations. They just have to show they don't suck, right? They just say, hey, we didn't lose any money this quarter, or sales are not declining anymore, or anything. And they did, and it gapped, and look where it gapped. Now, when we bought this in here, I told everybody my target on this thing was $20 to $22 a share. Why? Well, just do this. Draw a line that touches as many of these candles over here as you can. Okay, and if I was trying to catch as many as I possibly could, I think it's going to be right around in here. It's around 21.5. I was looking for 22, but 21, 22. Everybody who bought in December and January and February has been massively underwater the entire time. That's huge pent-up supply. People who want to get out at break even if given the chance. And notice how the stock ran right to there and sold it off. Okay? Now, if you bought at 14 with me, you're still up nicely. You're still up, I don't know, 10, 15%. But, folks, from there to 22, that's a 57% gain in 45 days. And so hopefully you sold there with me. If not, okay, well, let's let the thing continue to work. But what I'd love to see is now a new setup. Let it consolidate again. Show me the shorts are getting, the stock's being accumulated. We'll see if we get another big run. But that just played out perfectly. Breakout here, retest here and here, right there to the supply zone, like clockwork. And if a 50% gain in 6 weeks is not good enough for you, I'm not going to be able to help you. Is it retesting the two? I mean, maybe this stock doesn't seem to Well, I guess it does kind of respect the moving averages a little bit, but not to a big degree. I don't think it's going to be the key thing here. Check out Circle. Okay, let's take a look. Yeah, it's trying as well. So very volatile stock, makes big moves. These are doubles when you catch them, right? So it's exactly what you want to see. Now there's some potential legislation with crypto. I haven't dug as deep into it as I probably should. I'll try to read about that this week. But yeah, we're starting to see, right? What I'd love to see is a little bit of this in here. And you do have a bit of supply in here. So ideally it kind of comes up and stalls, puts in a few days, and then breaks out. And then, yeah, you're probably running up here to 110, 120, 130 potentially, right? So, yeah, I think it looks good. Is Nike at the bottom? Boy, talk about, nope, not at the bottom. Not yet. And it's going to be tempting to say, Ross, this stock was $180 5 years ago. Now it's 40. Why should I possibly not buy? Well, what makes a stock go down 80% in 5 years? They're not doing things very well. Okay, let's look at their earnings and sales. Look at the earnings falling. 25, 45, 80% year over year. Now, May was good, but probably a one-off because the sales didn't increase. They probably just sold something. Look at this column here where my mouse is. That's the sales change. Quarterly versus a year ago. So August 24 versus August 23. Nov 24 versus Nov 23. Their sales are going down. They're selling less stuff. Companies are supposed to sell more and more and more. They're supposed to grow, right? Well, if you're not growing, in fact, if you're shrinking, then you're going to trade at a very low multiple of your earnings. And what are they earning here? Call it, I don't know, $1, $2 just a share? They're trading at 20 times earnings and a company that's losing. That's too expensive, right? So the fundamentals don't make it cheap. And what would we need to see to form a bottom here? We would need to see signs that the stock is being bought and accumulated. It has to find it cheap, whether that's $40 or $4. It has to fall to a price where investors say, that's a good deal. I'm going to make money long term. Guys, let's start buying Nike. And if that were the case, these dips would start to shallow and get smaller and tighten up. What are they doing? They're getting lower. It's still making new lows. That means there's no demand in this stock. Nobody wants it. They're not buying it. In fact, they're selling it. So even though it is down massively all the time, I wouldn't do it. And somebody said, go woke, go broke. I kind of tend to agree. Disney was a case study in this. You know, look at Disney. It was rocking. And then what'd they do? They said, we're going to put a transsexual, a transgender, whatever it is, in every single movie. We're going to turn white characters black and black characters white, and we're going to start some show. I mean, it's crazy. Their audience is kids and families. I don't know what Iger's thinking. But, yeah, it got cut in half, and rightfully so. People don't want this crap forced to their children. So, you know, again, the causes don't really matter. If I just offended half of you, my bad. I mean, it really doesn't matter what's causing it. The fact is nobody wants it. And if this stock was trading at 2 times earnings, I'm still not going to buy it until I see that there's demand. Because that's what moves stocks, right? If y'all are looking for a politically correct YouTube channel, you didn't find it. Disney and Jack are the back of the box for stocks I would never buy, even if I could make a lot of money. That's fair. Totally fair. And I'm not offended at all. Please, nothing I say, nothing you say about me is going to hurt my feelings, okay? I'm not telling anybody to do what I do. Just showing you what's in my head and kind of what I'm looking at here. Hogs, isn't that, yeah, Harley. Okay, Harley does finally look like it's trying to consolidate. Now, Harley's been not doing well. For a decade, this stock has been going down. People just don't buy as many motorcycles. I don't know anybody my age that has one. But we are starting to see some signs of accumulation. I don't know that I'd call it perfect, but, you know, we are starting to see, right? It is kind of shallowing up. So they could be finally making a turn. What are the sales? Yeah, I mean, again, the sales are declining as well. Our earnings are kind of all over the place, so I don't even know how to value this thing. But yeah, looks better than it has in a while. I'll give you that. Netflix as well. Netflix is the worst. You know, they made a show about Vikings, or a movie about Vikings, and the leader of the Vikings was a black woman. I mean, and it's just as crazy to make a movie about a, ancient African tribe, and the head is a white guy. It's not a racist thing. It's just completely historically inaccurate. And people can tell when you're trying to force your woke nonsense on everybody. So yeah, Netflix is falling. Now, I don't know how much that's the wokeness, because they've been woke for a while. I think it's more about their sales growth kind of slowing. They've penetrated the global market in a pretty big way. But yeah, it has not been a favorite in its classic stage 4 downtrend, right? Falls from the peak, down below the 200, boom. What's the average? 50 to 80%. Stage 4 down. Everybody knows the 4 stages of the stock cycle. I'm not going to go through all this today, but I'll just put this up if you want to screenshot it. Because if you are not familiar with the 4 stages of the stock cycle, you absolutely need to be. This is what drives stock prices. This is the institutional formula. Screenshot that real quick and read up on it later. Put this image into Claude or ChatGPT or something. They'll explain it to you. John said he's looking for the next transgender James Bond. That's funny. Nike's still in stage 4. I mean, until it starts to build and tighten, that's a stage 1 consolidation. But stocks get accumulated when they're cheap. They get marked up and driven higher as the demand increases and sales and earnings and profits are flying. It reaches a full valuation, or they start screwing things up, or start putting, Target started selling, girls' swimsuits with a penis hole. I mean, it's crazy stuff, right? And so the institutions get out, it starts getting all wobbly, and then it goes into a steady stage 4 downtrend. And the markdown phase happens until it eventually gets back into stage 1. So if you go back and look at a Nike and just put this thing in a weekly chart, that's clearly still in stage 4, right? And go to logarithmic scale, it'll even things out. So you had, what was the decline in here? 50% decline, there you go. Big clean stage 1, kind of went through the process in here. And then as soon as you start getting under the 200, and under the moving averages, notice what a stage 4 downtrend started, and this thing has just continued to sell off. No meaningful presence above the 200-day moving average. And it's good. You're going to have to wait. At least I recommend waiting until you start to see either a sideways action or consolidation, and the stock finally comes out and then begins a new stage 2. So that would be stage 1. This is stage 4. This is stage 2. This over here, as you can see, was 3 with the wildness, right? And what's it going to take? I don't know. Either it gets cheap enough to buy, or the company changes direction, a new CEO comes in, or they pivot to I mean, I don't know what's going to happen. But that's what it's going to take. Go look at Klarna. Yeah. All right, let's fire off some stock. Klarna looks beautiful. Now, this is something you're going to see in nearly every IPO. SpaceX is not special. This always happens. They come out, they price the thing as high as they possibly can. They're almost always overvalued because the VC guys are greedy. The early investors want their money. They put it at a crazy price. It then goes into price discovery, which typically follows a big decline. And then look what we got here off the lows. Let me zoom in a little bit. Whoops. Sorry, I'm not trying to give everybody a seizure here. Look at the action we saw off the lows. Now, it's not, again, some people go, Ross, it was supposed to stop at 16. It went to 16.10. It's not going to be that precise, okay? You just want to look for the broad strokes of it. But see how it's kind of consolidating and tightening up here? See how it got nice and compressed? And then you kind of break out, retest, start to move higher. This is what you'll typically see. So, I mean, basically came out of the gate in a stage 4 downtrend. This is your stage 1 base, and we're starting a new stage 2 uptrend, or at least trying to. Okay? So, when I look at Klarna, it's coming out here. It kind of looks like it's consolidating again, right? It is again kind of tightening up, and I'd love to see a little, just a couple of days, 3, 4, 5 days like that, let that 200-day come down and then break out to the upside. That's going to be a great buy. And where's your target going to be? Give me a number. Where's your target? Let's say Klarna plays out like I just said. It breaks out higher. Gold, silver, copper. We'll look at them just a second, Shauna. Where's your target? Everybody in here should know this. Darren, I love you too, brother. Yes, I'm still short. Yes, I'm getting crushed. No doubt. I am getting absolutely hammered on SpaceX, okay? Metcalf and BTU from last week are doing great. The gold's up good. I am getting absolutely slaughtered, around $2,000 today on this SpaceX. So I have been dead wrong the last 2 weeks on SpaceX. Ross gets them wrong too. I still think it's going to 60. I'm going to hold, but yes, I'm getting clobbered on SpaceX, full disclosure. All right, 35, 32, 25. No, 32, 32, 30. Yeah, exactly. Right in here. Since this thing went public, the only place buyers and sellers found agreement where it spent several months was kind of right here in this 30, 33-ish dollar range. And so all these people are looking to get at a break even. There's your supply. So if Klarna breaks out as we expect, it comes out here higher. That's what we're targeting, would be a move of about 50%. Somebody said, I thought you said you weren't shorting Elon Musk. I did. Oh, I'm such a hypocrite. Here, you want to know the truth? Here's what happened. I said, I think it's going to 60. I'm not shorting it, but I think it is. And then I got so many comments. I get them every day. Oh, the genius who said it's going to fit. I mean, roasted online, right? So I said, all right, fine. I'll put my money where my mouth is. So this was totally an ego trade. Okay. I'm trying to sell another 100 at 150. I will admit defeat if this thing gets above like 175. I don't think it's going to, but I'll admit defeat. Why? Because there's the only little supply zone right in here. All right. But I have got this one massive. I think what happened, and the reason my timing was off, I believe the short sellers drove it down so much for the same reason I said it was going down, leading up to this lockup, that when the lockup actually came, they covered their shorts. Okay? That's what I think is happening. Then the momentum just piles on because everybody has a religious experience when it comes to SpaceX for some reason, just like to do with Bitcoin, and driving it higher. So, yeah, I'm getting crushed, without a doubt. This is painful. It is painful. I'm still don't get right, but I'm gonna limit this to about $5,000-$6,000 in loss. If I take it, I'll take it. Well, that's true. I didn't on the stop loss. I didn't really have a setup for the short. I just kind of did it to kind of put my money where my mouth was. And I saw this big 15% up day and thought, this is crazy. But we'll see. DXYZ. No, I mean, that was a long time ago. That was leading up to the SpaceX. We identified this as a backdoor play into SpaceX because I knew, the retail mob doesn't know what a PE ratio is. They don't know what a valuation is. They don't know the difference between a stock worth $100 billion and $100 trillion. Like they just don't know. The average, not interested in stocks type person, right? So they're like, it owns SpaceX, I want it. And so we figured this would happen. I almost did a video on this at 24, saying it's undervalued because it owns Anthropic. I didn't. I guess I should have, because it's up 35% since then. UAMY. Yeah, I like the story here. Does it look like it's getting ready for setup to go higher soon? No. So fundamentally good. Technically not great. Somebody said gold, silver, and copper. Let's take a look at these. I am long gold, as you can see from down in here. So I did use a stop loss. I did follow my rules like I should. You can see the consolidation move down here. This should have been the buy point. Let me turn these moving averages off. Makes it clustered. This should have been the buy point at 41.88. I got in at 42.51. You might say that's close enough, but I really like to be precise. The reason is this breakout happened about 5 a.m. I got to my desk at 7:30 a.m. that day, and it was already there, so I just bought there. Then my stop to low of the day. But really just absolute, real textbook consolidation here. So looks good, kind of slowing down a little bit, but I think we should be good for at least a move to kind of 4,800 here in the next few weeks. In gold, I like it. Silver often moves in tandem. Pretty similar action with silver. I'd like to see move to about 75. And then copper is really the standout here. We talked about this one earlier. But you have what I call like a base on base. Okay, so you had this one. And again, it had one day where somebody drove it up too high. We're not going to focus on every single little move here. But see how it kind of came in, nice little cup with handle, breakout, and then it's formed kind of another base on top of that, right? So it's consolidating, get a little deep, but then it's coming in and kind of shallowing. So, not just textbook perfect, kind of like it cleaner over here, but still looks like it's going to break out higher. So, yeah, I love copper. I've been in love with copper for about 9 months now. I had at one point 75,000 pounds of this stuff. I do think it's going higher. It looks really strong here. And the metals trade just kind of makes sense, right? I mean, we're fighting wars that we can't afford. We're probably going to pay to rebuild the company we just destroyed like we always do. The government's printing $2 to $3 trillion a year. So debt is increasing. Spending is increasing. As the printing increases, that drives inflation higher. I think we all know by now we don't trust the government's numbers on inflation. I don't care if it's a Republican in office or a Democrat or an independent. The numbers are not true. Why would they lie? Well, let's see. They have things like inflation-protected bond tips that they have to pay based on the inflation. They have their own massive debt. What's the ticker for the federal? $39 trillion and counting. So if inflation is higher, they gotta rates will adjust. Anyway, I just don't trust the numbers. But that inflationary trade is driving the prices higher, and copper has a real case for it. I mean, copper, we have a big shortage. We're projected to have a massive short coming for the next 5 years. It's not easy to mine. It's not quick to get mines up and running. In the meanwhile, we have the biggest infrastructure project in the history of the world going on in the form of data centers and grid expansion, all of which takes massive amounts of copper. So this is when I really get aggressive, when the macro story is very easy to see. We need a bunch. We're going to need a lot more, and we don't even have enough to meet the demand we had before. So supply and demand, there's a big demand, not enough supply, it's going to drive price up. And then you got patterns setting up in the chart that show consolidation. So I think copper looks great here. XPEL, yeah, looks great. This is the automotive film, right? Yeah, automotive aftermarket. Yeah, they make the vehicle wraps and all. Yeah, looks great. Exactly. Good eye. Y'all see what he's looking at? See, we had this big, huge demand. It then sold off, and now it's starting to consolidate, coming in. Got a little sell-off and right back. Right? Looks really good. URG. Love the story. Long-term hold, I think it's great. They've got a huge moat, durable supply here in the uranium space. Technically, it's just a wild little girl. I mean, she goes from $1.20 to $2.40 back to $1.20 to 2 to 1 to 2 to. I mean, it's just wild. So you got to play it kind of tight, but it is starting to consolidate here. What I'd really like to see would be a little bit of this. That would really get me excited because this can just blow out, right? You get these big 30-40% moves in a couple of days. But yeah. I think it's a little early, in my opinion, for what I'm looking for, but it does look good. Cerebras, yep, I can see it. I like it. This is quicker than most. Boy, that happened fast. Look at this. IPO price down 54%. Didn't take very long, did it? About a month. So This can play out over 3 years, play out over 3 weeks. I don't know what, it's the velocity of the market. But yeah, you can see clear resistance here, right? Can't get above it. Gapped up here. Market immediately shut it down. Big up day today. Yeah, this looks phenomenal. Looks really good. So it gapped up on earnings, pulled back in, immediately coming back. I think it looks great. If I bought it here, I'd like to have a stop at about 214 if you can stomach it. And then look for a move higher. Beautiful. Lunar. Sorry, I'm not ignoring you, Cypher. Yeah. I mean, it's a bit extended to me. Like, I know it doesn't look like that much considering where it was, but, it's up 80% in 3 weeks. So, not saying it won't go higher. I'm saying it absolutely could pull back in here and kind of do something like this, which is what I'd like to see to get me in. I'm scared of chasing these that are already up that big. And here's why. The first thing I ask myself when I buy a stock is, where am I wrong? Right? Except when I'm shorting SpaceX like a moron. But typically, right, where am I wrong? At what price does stock need to default to for me to say, nope, I was wrong, I'm getting out? I mean, for me, right now, like here, that's only 2 days ago, and that's a 30% stop loss, which I'm not willing to take. So I wouldn't buy it, but look, there's a ton of strength, ton of volume. If you just want to hit your wagon of this thing and trail the stop at 15% or so, go for it. I'd fully support it. Baba versus Walmart. I mean, I think Baba looks better. Well, let's see. They both look about the same, to be honest with you. Let's see. Little difference. I don't know. I'm not in love with either of them. I like Baba as a company better, only because they're getting some AI exposure. So if you're not familiar, Baba basically has some open source AI models that you can run. I might explain this wrong or not understand it fully, but I believe the way it works is you can kind of run it on their servers. You rent compute from Alibaba to run this free open source model. And so they're essentially giving away the model to get people to buy the compute. Think about that like I don't know, like if they can put a free transform on your house because they want you to buy the power every month from them, right? That kind of thing. And so they're diversifying in a way that I don't think Walmart is. So that would be my pick out of that. Into the dollar, sorry, but I think, Robert, I agree with you. The question is on timing. I don't know when. Burn. So still above that $4, I put it out there. I do like the company. I'm very surprised. I thought with this momentum we saw, it would kind of keep running, or at least kind of consolidate tighter. I don't like that it's kind of rolling over here and making new low, new low, new low. So I've gotten out of this one. But I think it's a good long-term play, but I don't really get aggressive and stay with it and be like, I'm committed to this unless it's like the technicals, the picture, the chart looks good, and the story's good, right? I'm willing to lose money on a high conviction play like that, but I have no high conviction to this. I mean, it's like, I think it's a cool product. It's a gun, basically, that shoots pepper spray. I think there's a market for it. Do they find that market? Do they get advertising figured out? I don't know. There's definitely some risks there. But long term, yeah, I think the risk reward is very, very strong here. PLGDF, is this an over-the-counter stock? $200 million. Palisades Gold Corp. Very, very small. Micro-cap stock. But, man, it's actually pretty clean. Now, it's a wild little sucker. But can you see the same pattern? That was a very small stock, okay? Micron is $1 trillion. This is $200 million. That's their market cap, okay? Small cap stocks are defined as $300 million to $2 billion. Mid cap is $2 to $10 billion, large cap 10 to 100, and then megas above that, okay? So it's not even meeting small cap. It's a micro cap stock. So you have to understand, with a micro cap stock, one, they're typically more volatile like this, and two, the big institutions don't buy them. They can't. They're usually forbidden by the bylaws of that fund. They also just can't get any money in it. I mean, look at the dollar volume here. This thing trades $112,000 a day. Total dollar volume in and out of the stock in an entire day, $112,000. Okay, Micron trades $112,000 a second. So they're not going to buy. They can't get enough money into this. So this is just retail driving this, okay? And small retail at that. But look at what we're seeing here. It did put in. Like, we are seeing those signs of accumulation. So you still had a pretty clean breakout here that is rallying pretty strong. But take everything I show you today with a grain of salt if you're applying it to really small stocks. Why is China buying all the gold they can? They don't want to hold U.S. debt anymore. We're printing money like crazy. Think about what you're doing when you're buying a government bond, okay? You're giving, let's say, $1 million. All right, let's just do some math here. You're giving $1 million to buy a bond that pays you a coupon payment of, let's say it's 4%, okay? So that's $40,000 a year, right? And at the end of 10 years or 20 years or whatever, after getting 40K and 40K and 40K each year, you get your $1 million back. Well, here's the problem with doing that from a government that prints $2 to $3 trillion a year. Is you increase the money supply, you put more dollars in the system, chasing the same number of goods and services, the value of those dollars go down. This is the idea of inflation. And I'm sorry if this is really elementary, but for some people, they haven't had it explained in a proper way. So let me do that for you. If you had $10 chasing 10 widgets in a mini economy, each widget would sell for $1. If you threw another $10 in, and now you have $20 chasing the same production, the same 10 widgets, they're going to sell for more. It's not that the widgets got more expensive. It's that the value of that dollar went down. And so it takes more of them to buy those things. And so if the US dollar is losing 4% a year, then 10 years from now, and you get that $1 million back, it's going to have the purchasing power of, call it $500,000 10 years ago. So you're buying long-term debt and holding a currency that steadily loses value. And nobody wants to do that anymore. Plus, China hates the U.S. They'd love to see the petrodollar end. They'd love to see us lose the reserve currency status. They're just getting out of the dollar. And we're seeing this globally with all the central banks, buying up gold, selling treasuries. And look at this. Let me show you. Now, the federal funds rate is what that's what the Fed sets. That's the interbank lending rate, okay? And it was cut in 25. It has not been touched this year. It has stayed flat. Everybody see that? This is January 26th, my mouse is. This is today. It has stayed flat at 3.63%. The Fed has made no changes to interest rates, okay? Everybody with me? This is January to today in the 10-year bond yield. Why is it going up? I thought the Fed controlled interest rates. They haven't raised them. So why are interest rates up 70 basis points? Because globally, the market is selling U.S. treasuries. And if a bond, okay, is worth $1,000, the bond is worth $1,000, and it pays, a 4% coupon, and investors say it's not worth 4% to me. I just don't think I need 4.5%. I need 5%. Well, what happens? They say, all right, well, you won't take 1,000. What if you bought it for 900? If you bought it for 900, then that $40 payment's more like 4.2%, 4.3%. Oh, I'm only going to pay 800 because I need that $40 coupon to be worth whatever, And so as the price of the bond goes down, okay, this is the price of the bonds. As the price of the bonds declines, the yield increases. That makes sense to everybody? And so, again, this is the law of supply and demand. There's not enough demand for bonds, but there's sure as hell a bunch of supply. We got to print money to pay for every government program, every freebie handout, every, illegal whatever, every foreign war we decided to fund, every nonsense NGO. We got to have the money. That's how they get it. They make fake bonds. And so nobody wants them. And so when the supply is greater than demand, the price goes down. That drives yields higher. So that's what's happening on a global scale. That's why I'm so bullish on gold from a fundamental standpoint, and silver and all the commodity metals, really, especially the industrial ones. So that's the big picture for what's happening. And people say the market is higher than ever. Think about what you're saying, though. The market priced in dollars is higher than ever. Why? Because the value of the dollar is going down. And listen, I'm not some crazy conspiracy theorist. I'm going to keep trading stocks. I'm going to keep owning stocks. But a lot of the rise comes along with inflation. And I'll show you this chart that I made. Okay. This is, shoot. Wrong button. There we go. This is the S&P 500 index priced in gold since 1971. And I'm sorry, I know you guys didn't come for this, so I'll get off my soapbox here, okay? But when you price it in gold, it really hasn't done much, right? In fact, we're still lower than we were at the dot-com peak. From the 2009 low up to today, the market's up like tenfold in terms of dollars, but it's really only up about threefold, fourfold in terms of gold. And so, I know you didn't come for this. I'm just trying to point out a picture here that we're so conditioned to think about wealth and growth in terms of dollars, but the dollar, the measuring stick, is steadily going down. So if no companies did anything, if the sales and the earnings and the growth and all that stayed flat, just the fact that the dollar is declining is going to mean it takes more and more and more of them to pay. And the products they sell are going to go up, which makes the earnings number goes up, right? The burger costs more, the car costs more, the gallon of gas costs more, the lumber costs more, right? So it looks like they're seeing this great growth, when in reality, half that's inflation. Anyway, that bore everybody? Did anybody not know this that kind of understands better now? Tell me I didn't waste 2 minutes of everybody's time, 5 minutes of everybody's time. GLW SIPO. Bread costs more than silver. Every freebie handout. Wow, I guess everyone poor, sick, whatever should just die. Listen, if that's how you want to interpret it, that's fine. Not what I said. If you don't think we're wasting and there's massive amounts of fraud and nonsense going out, if you don't think spending millions of dollars for, transgender awareness in Uganda is a waste of money, then you're not going to like me at all. The government program is supposed to help people, right? Medicaid and Medicare and unemployment insurance, and those are designed to help people who need it, not be sent to everybody with a fake Social Security number. Okay. Can I look at Max? What you thought? Sure thing, Joey. Yeah, really, really strong. What is this? Mining. What are they mining? Okay, don't know much about them. Nicobit Corvette. Some kind of mining company. I'm not sure what they do, but I mean, the trend looks great. Yeah, really, really strong. Nice recovery off the July sell-off. Had some pretty clean buy points in here in the past. Yeah, a lot of momentum. I mean, I'd love to see it stall a little bit, but looks really, really strong. Could be extended, but nonetheless. Yeah, the daycare fraud, exactly. Buy the dip in Arco. Let's see. Whoa! Oh no, my money. Oh, what is this? What do they do? Convenience stores, wholesalers of fuel. What on earth did they report? The stock got cut in half. I mean, the earnings were bad. Top line was a beat. They must have massively lowered guidance or something. I don't know what's happened here. I don't know. This would make it a case for the fundamentals. Let me see if there's any insider buying here. That'd be the best clue. Let's see if I can open this up. What's the ticker? ARCO. Let's see. Not yet. They're not buying. General counsel is selling in June, though. But he feels pretty good about that. I don't know. I have to dig into this one. I don't know enough about it. But there's no technical reason that says buy. If I did, I'll tell you how I'd do it, though. If I bought this here, my stop would be the low of this sell-off, right? You got a massive discount. This stock just went on sale, 50% off, okay? And it went through massive, heavy volume selling for 3 straight days. It is now starting to come back. If it breaks that low, forget about it. I don't want it. This should be quick buying. So 12% risk is what I'd take on this. That's it. But beyond that, I just don't know. Care if we don't get canceled. They'll cancel me one day, is what it is. Trading's been down for 30 minutes at Schwab. Oh, no. Review on Doug next hour. Oh, thank you. Eric, let's see. I love Doug. He's such a cool guy. Erickson, yeah, I like this. Again, it's coming off the lows here. I don't know much about the company. I'm just looking at the chart, but it does look to be consolidating really nicely here. We're kind of coming in, tightening up. Yeah, absolutely. Absolutely, you make a case for this one. Looking good. Bring Doge back. Yeah, if bring Doge back, that means Elon leaves SpaceX and Tesla. The investors don't really like when he loses attention. Breakwave, tanker shipping. Yeah, I love the tanking sector, or the shipping sector. Been talking about it for a while. That's not it. What is it? Boat. Yeah, Boat's the global shipping ETF. I've been talking about this for a while. What's happening with the shipping is twofold. One, they're getting to charge higher rates because of everything happening with the Strait of Hormuz and all. But secondly, they're getting longer routes. Most of the stuff that comes through the Strait of Hormuz, it's not coming to the U.S. We have our own oil. Most of it's going to Europe and Asia. And so a lot of those countries who depend on everything runs on diesel there are going, it's not worth it to us. We can't get it through this strait. One day it's open, next day it's closed. We're getting RPGs fired at our tanker ships. Our captains aren't going to do it. Like, screw it. We'll just buy it from South America. We'll just buy it from the U.S. or from Canada. So they got to ship it all the way down around the Horn of Africa back to them instead of just through that little strait. And so what that means is these guys, the shipping companies who were doing I'm just making numbers up, 400-mile journey are now doing a 4,000-mile journey. So they're getting a lot more dollars. And there's more demand for those long-distance carrier vessels. So I think the global shipping, they're in a heyday. And look, this was already running before the Strait of Hormuz situation, right? And so what we've seen here is kind of this big multi-month, again, sold off here. Maybe they've solved the thing in Iran. Psych, they didn't solve anything. Right back up. And then just, pushing higher. So, yeah, I like this sector. I like it long-term. It's clearly in play and leading. Ondas, ONDS, I don't know. I don't really see much here. The stock's gone absolutely nowhere for the last year. Wouldn't be one of my picks. AG. Yeah, I like First Majestic as a play on silver. The miners are going to move in a multiple of the metal move. You guys know that, right? Like, if you let's look at GLD. Okay, let's just go back. We'll put this thing, and I'll put another one on top of it. Okay, let's look at GDX, which is the miners. So the blue is the mining stocks, the mining ETF, and the green is just gold. So when gold goes down, miners go down more. When gold goes up, miners go up more. Okay, so the reason is their profits are tied to the price of gold. If gold goes from 4,000 to 5,000, okay, That's a 20% up move in the price of gold. Everybody with me? But what happens to the profits of a gold miner? Well, it costs them, let's say, $3,000 to get an ounce of gold out of the ground. That's their cost. So when they sell it for $4,000, their profit is $1,000. Okay? When they sell it for $5,000, their profit is $2,000. Now, I'm making these numbers up. It might be 1,700 or 4, like whatever, but you get the idea, right? A 20% up move in gold is a 100% increase in their profits. And a 20% decrease in gold is a big hit to their profits, right? So that's why they move in exaggerated form of this. So what I like to do with just the way I try, I mean, I hold GDX long term, just for full disclosure, but like when we get gold breaking out here, okay, and well, let me show the futures. It trades longer hours here. When I get gold breaking out, okay, from a pattern in here, I'm like, all right, looks like a good time to buy gold. You can buy a gold miner and kind of get leveraged on that. So gold here, just in the last, 12 days, I made that video's up, 6%, right? But GDX, over that same period, and again, it's kind of gappy because it only trades during regular market hours, but instead of being up 6%, it's up 16%, right? So you can trade just GDX. I like Kinross Gold is one of my favorites. KGC is really clean. All the big gold miners. There's some guys who do a lot of research on mining stocks, and God bless you guys. I'm all ears. I don't. So I just kind of stick with the big guys, your Newmonts, Wheaton Precious Metals, kind of a big silver one in there. Kinross, Pan American Silver, another great silver stock, like Hecla Mining, AG, First Majestic. So any of these. SMR. Yeah, not looking good. And look, you can make a lot of money on here's the thing about these kinds of stocks, and I want you to see where we bought this. This isn't for bragging rights. We did this in our Alpha Stock service, but can you see the pattern? Look at the strength here, okay? That's a 200% move in a couple of months. It absorbs, it consolidates, it breaks out. This was a massive move, 200% in a couple of months. It then gets eviscerated, puts in that same consolidation pattern again. Another great big breakout move. And look, maybe you sold it all here. Maybe you sold some here. Maybe you waited till it got into 50 and sold it here. Doesn't matter. You made a ton of money on this, whether you're any good at this or not. Okay? But fundamentally, it's garbage. The story's great. They make small modular reactors designed to power data centers. The push to nuclear makes sense. It's probably going to happen. But right now, it's just a story. There's no numbers. Look at the sales. Look at the sales column. This is in millions. Last quarter, they did $100,000 of sales. The biggest quarter they've ever had was $34 million. Folks, the company is valued at $4 billion. Okay? There's no money here. There's no profits. It's all hypothetical based on assumptions. So is SpaceX. They got big revenue. They don't need profits yet, which is fine. I mean, you're buying based on assumption they will come, but you have to know it's a thin story. This is not like they're making massive cash flow by the dip. It's going to work out long term. It could go to 0. It could go to 900. I do not know. But that's why it's so important to trade. And so it's not a coincidence the two times we bought this, we're on these massive moves higher. Have I bought it at all in the last 18 months? Not a single share, because it's steadily marching lower. And if you look at it now, I mean, it just made a new multi-year low last month. So until I see signs of accumulation, until there is a footprint on this chart of demand coming in, I'm not going to buy it. Does the story sound good? Absolutely. But I am, as you're learning, not a long-term investor. And other than things that I believe in no matter what. That's gold, maybe an index fund, right? Copper, a big basket of miners, that kind of stuff. But I'm not going all in on a company. I mean, I made more than $100,000 last quarter, okay? It's like, it's crazy. So it's just not it's not a stock you can really get conviction behind. Okay. All right, guys. Well, listen, we're about 15 minutes over time. I'm going to go ahead and end it here. I love all of you. Your questions are great. For those I offended, it was nice knowing you. I love you too. Uh, anyway, if you are not already a member of the Black Ops service, please go ahead and sign up for that. It is $5. No joke, $5. If you don't, I say it all the time. If you don't get $5 worth of value out of it, you leave me your address in the comments. I will mail you a $5 bill personally. Okay, but you're going to get these sessions every week for a year. Another session, members only, every Thursday with my analyst. You'll get my weekly newsletter that goes out every Friday, plus indicators, plus bonus report, ton of stuff in there. It's just $5. So check it out, tradewithross.com. Scan the QR code. And otherwise, I'll see you all next Monday. Thanks, everybody.